Hey everybody, it's Pete. Welcome to today's episode of Stock Trading Pro. Today's Stock Market Live is going to focus on Robinhood stock, and big questions today about whether or not people believe that's one of the best stocks to buy now. We're going to work it. We're going to talk about it. We're going to talk about position sizing, but I think the biggest thing to have a discussion around today is the optimal entry and where a lot of stocks are right now, and buying stocks right now, and the risk versus reward putting those new trades on. There's not a question that the market is in a bullish tone right now. We've rocketed back above the 200 period moving average, the 50 period moving average. We've taken out all of the short-term levels, but there are a couple of things that we need to pay attention to in the stock market, but I think even more in the real estate market that could affect the stock market right now. Obviously, interest rates are going up this year. People are scrambling to pick up houses. We're going to talk about that. Maybe actually John Bates is on here. I know John Bates knows real estate. Maybe we can have a conversation about that as well. Futures are down just a little bit this morning. We have 5 different stock picks that I want to talk about today. One of them had bad earnings and whether or not that's a new buying opportunity. But we're going to start out today talking about Robinhood stock. The decision that they made as a business to extend their trading hours and whether or not that was a smart decision. Maybe they appear that way in the short term. We'll see. But we're going to talk about all of that, including a sector that was on fire that has completely cooled off, has been one of the most frustrating sectors, and whether or not you should still be giving it your attention and whether or not it should still be allocating buying power to it, because those stocks have just kind of been a dud really for about 2.5 weeks. It was just very, very surprising. I thought we were going to get a little bit of a better push. Oil prices in the conversation again here today. So we have a lot of stuff to talk about, but more importantly, we're going to talk about going forward, what we're going to be looking at heading into the rest of this week. And what are the odds of making money on buying stocks now? Where do you think they're going to end up being on Friday? One of the biggest things that we talk about, especially on the day trading side of things, if you're not day trading, it doesn't matter because it still applies. Typically when you're day trading, actually, you know what? I'm going to save that. I'm going to save that as soon as we come back. I'm going to be back in just 1 second. Okay, how is that for everything we talk about today is for educational purposes. I hope that I'm helping you make better decisions. So what I meant about the day trading thing, now raise your hand if you've ever been in a position, especially on the day trading side of things, but it could apply on the swing trading side as well, where you have a good position on and you kind of watching the stock go back and forth and you kind of like, it's not at my profit target. It's not at my stop loss. It's kind of in that gray zone, and you get out of the trade just because it's not moving fast enough, or maybe it's even slightly negative, and then the stock does exactly what you thought it should do. You bought the stock, 2 days later, it's exactly where you thought it was going to be, maybe even a week and a half later, 2 weeks later, if you were swing trading the stock. One of the easiest ways to avoid getting out of those good ideas too soon is to stop focusing on the micro time frame, your entry time frame, in the context of the trade management, because essentially the way it should work is higher time frame, bullish order flow. In this case, we're looking to buy stocks, bullish order flow in the higher time frame. You go down to the shorter time frame to manage entries and start working positions, but then you go back to the higher time frame to manage the position. And I think a lot of traders don't take that the third step, which is leaving the micro entry time frame and then going back to the bigger picture, because we forget that the bigger picture is the whole reason we bought the stock in the first place, not because we got that little bull flag on the shorter time frame. So the phrase that we teach everybody, the one thing that we talk about is on a day trade is, where do you think the stock is going to be in 2 days? And that will help you stick through the fluctuations. And the same type of conversation on the swing trading side of things when you buy stocks is, where do you think the stock is going to be in a week? Because it's pretty easy if you understand order flow. Obviously, the way we do it is stacking the order flow. It's not hard to tell the direction of a stock. It's really a question of timing at that point and how close you are or far you are from the optimal entry. If you bought it pretty close to the optimal entry, you should be able to withstand the minor fluctuations in the stock before it does what you actually thought it should do. Now, I'm not talking about a stock you bought that maybe went down, is getting close to stop loss. That's not really what I'm talking about. That trade is not working. I'm talking about that one that's kind of like stuck in the zone there. They call it the gray zone. Where it's not a profit, it's not a loss, it's just sitting there. And it's a really common question we get: should I get out if it's not moving? And the answer is no. If it's still valid, if your edge is still there, hang on to that. So I'll repeat it again. If you're day trading, where do you think the stock will be in 2 days? And it'll take you out of that 5-minute candle time frame. If you're swing trading, where do I think the stock is going to be in a week? And that will help you hang on to your swing trades a little bit longer, especially if you're good at reading the tape and building the order flow, because we're really trading that higher time frame. We're not trading the entry spot. So pick a side, then pick a spot. Too many people just go to the spot and focus on that spot. All right. So we're going to hop on over. We're going to take a look at Hood. We're going to take a look at the market really quick, and then we're going to jump over into Hood. Cynthia, good morning. Always a pleasure to see you here. So here we're going to go. We're going to start out with the futures and build the case for what we're going to be looking at this week. Obviously, yesterday afternoon, we kind of joked around yesterday that it was ludicrous speed. If you know some of those Mel Brooks movies, the end of the day yesterday, the market just absolutely took off. The volatility readings went plummeting to the downside. And this is the kind of market that we ended up getting at the end of the day. We'll take a look at Apple as well in a second. We're actually down, but not down that much, quite honestly, considering where everything has been and how hard and fast the move to the upside has been. Let's just take a look over here. We'll go to the daily charts. We kind of blew through every level that you could think of. Now it's a question of whether or not this is going to end up being a short-term top that barely broke through. But I can tell you that this has confounded a lot of short sellers, which actually brings me to another point, which we're going to talk about Hood stock next. Is one of the biggest frustrations that we're seeing from a lot of people right now are they're trying to guess direction, and it's causing them to get out of good trades too soon. And I think even more importantly, it's causing them to put on short sales in the other direction too soon as well, because they don't have a line in the sand. They don't understand how to read the tape. I think reading the order flow, once you understand how to stack the order flow, which side to be on is obvious, but a lot of people have a problem with understanding when it changed. So if you think about it, understanding if it's still obvious and nothing has changed yet, you still have to be looking in that direction. The only thing that will be adjusted for you is position size based on how much you can still earn on the trade based on the optimal entry. So a lot of people left a lot of big money on the table over the last 5 to 7 days, guessing a top and reading into macroeconomic news as opposed to just the current tape that we're in right now. So I hope that's a lesson for you, because we actually spoke about that on our coaching call last week, which was learning from your own experience. Your own trading journal is probably the greatest trading book that you'll ever learn. So a lot of traders, especially new ones that just came into the boot camp, they're like, oh man, I'm angry. I missed it. I'm angry. I got out too soon. I should have just followed the tape, right? So we kind of flipped that around and we said, okay, I understand. Allow yourself to be angry for like maybe a minute. But if you want to start trading at the highest levels, everything has to be a learning experience so that the next time that happens, you're on top of it and you can avoid making that same mistake again. It's the traders who keep doing the same wrong thing over and over again that are the ones that say trading doesn't work, all that kind of stuff. Trading works. You just have to pay attention and eliminate what doesn't work anymore, and then just do those few things that work really well and produce the reliable wins, which takes us over now into Hood. So we're going to break down Hood a little bit. If you didn't see the news on Hood stock and the reason it was up 24% yesterday, this is actually where and why the story was a big one yesterday. After the company announces extended trading hours, so they're trying to move towards the 24/7 trading model that they have. Robinhood company, Hood stock. It's interesting because you have to think about who are the people targeted to trade Robinhood. Who are the people that are targeted that are Robinhood enthusiasts to trade, ultimately to create those transactions that will have Hood stock rallying. I think it's interesting from an initial jump perspective that you can kind of do the math that if they're opening hours up more, that should relate to more transactions. We all would love to have that 24/7 market, but I'll just tell you straight up, I don't teach pre-market trading. I don't teach after-hours trading. I did it, and I'm going to tell you why I don't teach it. When I had my trading firm, you could grind out the entire day. You could make your money. Let's say you make $3,000 for the day, and we're going to talk about some earnings in a second. All of that perfect day, you traded your butt off, and then 4:30 in the afternoon, earnings comes out on some stock and you're like, I'm up $3,000. Let me try and make some money on this thing. If I nail it, I'm good for the day. I'll go from 3,000 to 5,000. And as soon as that thing comes out, if you're wrong, or if what you anticipated doesn't happen, the thing rockets in the other direction. Now, I could hear what you're thinking. You're like, well, you just get out. It's not that simple after hours or pre-market. And I'm bringing this all the way back to hood stock. So bear with me for just 1 second. The reason I don't teach pre-market trading, the reason I don't teach after hours trading is because of liquidity. Pre-market and after hours trading, you can have some really fast moves, which is awesome if you happen to be right. If you happen to be wrong and you need to get out of the trade, especially if you have size, which is very common, it's a $15 stock. Without that liquidity, you could turn a very profitable day into a losing day in about 60 seconds. So I'm going to challenge you right now to ask yourself, why are you actually trading? Are you trading to see your account go up every month and give yourself the financial freedom that you want because you're in control? Or are you trading for excitement? If you're trading for excitement, go to a casino. They'll give you a free drink. Go there with $300 or whatever's a large amount of money for you and have fun for a couple of hours and then go back to bed knowing that you still have control over your trades. Trading for excitement is one of the fastest ways to be separated from your money. So I personally do not think it's a fantastic idea extending hours to the target market that they're after. I think that they could probably do a little bit better job of what they do well, which is that gamification type of thing in market hours. After hours is a completely different animal. And I am not, I'll just say it. I've been an entrepreneur since 1988. I've been a trader since 1994. I don't think it's something to celebrate. I have to be honest with you. We'll see how it unfolds. We're going to take it over now, and that might be controversial. I don't care. We're going to turn it over now to hood stock and talk about the trade in hood stock. I don't know if Derek is on the call with us here this morning, but Derek asked in our boot camp this morning about should we be looking to buy hood stock right now, and what does that mean? Well, a 24% move yesterday, and in case you didn't happen to see it, just to give some context of the way the stock was trading yesterday, it kind of went sideways the rest of the day, but it maintained this bid. Obviously, the volume on the price action yesterday was fantastic. You can see the spike here. Now, we talk about this quite a bit, is that it happened here. And look what happened. We had a rally here. We had a rally here. We need to see, and actually, you know what? Tilray stock is a very similar situation right now. We all know that we're looking for it. This here is probably one of the better analogies for what we're talking about right now in hood stock, where you get this one giant spike that breaks the downtrend, and then you draw the box and gets out again on one giant spike, and then you end up getting this. Now, we know Tilray is obviously a different industry group, right? A different animal. However, what we need to know, and we talk about this all the time, if you happen to be in our boot camp, you know exactly what I'm talking about right now. Stacking the order flow is how long has smart money been making that commitment. What we saw yesterday in hood stock was clearly algorithmic trading, was clearly short-term active traders hopping on board. We now need to see, does smart money, do people with really deep pockets, let's say, let's talk about Rex. I know Rex has been in the boot camp with us. So let's say that Rex has a hedge fund and he's like, okay, that news on Robinhood was okay. Let's really dig into the numbers and determine, even with that news, how much would that move the needle for hood stock? And should we start looking to build a position? First, that's the big thing that I want to talk about. If you're looking at this right now, the stock moved 24% yesterday on a news story. For me right now, the right trade management in hood stock would be to go in and start building a position. Because again, the thought process that we have is the first time it's breaking a trend, that's a first position if you believe that it's a new trend. So if the smart money follows up yesterday's aggressive buying and they're starting to build a position, why would in the world would we go in with full share size if the smart money is just starting to build a position? Now, how long do we know that's happening? Well, yesterday was the first day it broke out of a 3-month trading range after hitting new all-time lows. So essentially, we've been kind of stuck in this box over here. That's actually where it broke, but then we actually had to draw a new line because this one actually broke down to new lows. So we're kind of sitting over there. And this and the bottom below that are the box that we've kind of been stuck in right now, right here. So this is fantastic, right? It's absolutely amazing. It's good volume. It broke out, but it's really one day. You can't really include this because that was still inside the box when this trend got broken. That's actually the real first piece. So really, what's the risk on this trade? The risk on this trade right now is from yesterday's close back down to roughly $13 where it finally broke out. That's a pretty big risk, $5 risk for a stock that just exploded coming out of one day. I like the idea to start considering building a trade, but I don't need to catch the bottom. I certainly don't need to sell at the top. So I'll be actively trading the stock as a day trade, but from a swing trade perspective. And I hope you take this to heart because this is a really big part of trading that gives you the feeling that, quite honestly, that we all want, which is we have control over the trade regardless of what the market does. And the way that we have control over the trade is choosing when to get involved, what type of risk to accept based on the expected follow through. So in other words, if I'm willing to risk $1, what can I make on that dollar? And then what kind of share size makes sense based on where we are at the optimal entry. So again, we talked about this yesterday. If a stock normally moves $15 and it's pausing, pushed up and paused, well, like, good, there's still $15 left and you know the risk. If a stock normally moves $15 and it already went 12, that changes the game. So if we take a look at what Hood normally does and compare that to yesterday's price action, this is a pretty big deal because we moved a little bit here. Let's say we went 982 to 14. So that's basically a $5 move, 980 to 14. So again, that's another $4 or $5 move. Yesterday was $3. The last 2 days was $6. So essentially what we're saying is Robinhood has already gone what it normally does in just one day. So I want to be clear. I like the possibility of starting to build a position now, but I want to see more than one day. I want to see smart money come back a second day and say, okay, we're going to hold the bid and we're going to close the stock near the highs. If that happens, then I'm going to start to look to build a little bit bigger of a swing trade or start to build that swing trade because it's the first time it broke out of the box. If that kind of thinking is new to you, I'd suggest watching this video again because I literally just broke down how to game plan a stock and how to choose the right position size based on what you think you could make based on what the stock normally does. Far too many really smart traders just chase price and get involved too late. And again, I'll give you the perfect example of this stock, which is this guy right here. We had a bunch of people ask as this thing was rallying up about getting involved. And I'm like, no. I said no like 5 or 6 times. I said the only people that should be trading something like that are somebody who have massive experience. You could make quick decisions. You understand your executions. You can get in and out and you do not hesitate. One trade like that reverses, you can eat your lunch in only 2 days. And the stock went from $85 to $20 in 5 trading days. So you need to pick the right fights. And that's another thing based on your trading experience. So I hope that whole outline where I'm looking to actively day trade it because it's going to have good volume and I'll read the tape intraday. Our community will talk about VWAP and all the other things that we talk about for day trading. That's my swing trading bent on that idea right now. I just need to see one more day before I start to build a position. And I want to be clear, it's only a $16 stock, 15 and change right now. You can get a lot of shares on that stock. Be smart about how you allocate that buying power and get some feedback from the market. Okay. All right. So we're going to work our way into some other ideas that had earnings today. We're going to start out with Micron. Obviously, some of these other stocks in this group they have been strong, but this is, again, get a lot of questions about earnings and forecast guides higher. That's really the big thing we keep an eye on anytime we're talking about somebody reporting earnings. And Micron, which was kind of stuck in the middle of nowhere, really not necessarily any kind of price action here. And you can probably see that on the weekly chart a little bit better. You can see selling, you can see bullish U-turn, you can see melted candle, and now you can see well bid. And we're actually up 4% higher right now. So again, how are we looking to trade Micron today? Well, there's not a massive edge to the order flow right now. So basically just looking at it, trading out of where it is right now, which 85.37, which kind of takes it here. But if you really think about that, that 85.37 still kind of stuck. It's stuck in the middle of this range going all the way back to December. I bet you that if I did a Fibonacci here, it would literally be in the middle of the range. And this is just totally random here. Pretty darn close. Look at that. Almost smack in the middle. So think about it. Again, if we're talking about we take risk, we buy the best stocks because we believe there's a good chance of follow through. If we're looking at a stock where the order flow is literally right in the middle of nowhere, there's no edge based on the bigger picture of the order flow. So if you remember, I believe it was on Monday, we mentioned trading earnings is a strategy. Trading a news story is a strategy. Trading a order flow is a strategy. Earnings is a completely different strategy. So the fact that we don't have order flow, we take that off the table. And now we're saying, okay, we're trading the earnings catalyst in Micron. And whether or not that holds the bid today and the rest of the week will dictate how we plan to trade that stock going forward. So we bring that back over to the chart, and let's get rid of this guy right here. Take that off the screen. And we just look at the price that it's at now, which is 85.34, a little bit higher. So essentially what we're looking to do now is when this stock opens, if that's the price that it opens, as long as it's above that level, I'm going to look for it to start to make a run up to 94 over the next week or so. That's the trading strategy I'm using in this. Now, we've seen this happen quite a bit over the last, let's say even the last 2 months, where we've had these massive gaps up in some of these stocks. They've gapped up there, and then the rest of the week, they just melted down and melted away. That was one of the biggest challenges that I had when I first started trading. I'm like, I don't understand. This news was amazing. And I bought the stock, and it just keeps dripping down away from me. And I'm like, the stock is a monster news story today, and it keeps going down. This is how you avoid those losing trades. You need to have something that says, okay, it stopped going down. Now I have a reference point where I could bid for this stock because other buyers with deeper pockets have stopped it from going down or held it there. And now you have a risk. So everything we're talking about right now talks about probability of follow through, which is why we accept risk. Why we accept risk, because there's a good chance of it following through. Tape reading, which is what we're talking about right now, is how do we recognize if it's changed to justify the risk. Now, you might be like, wow, that's really complicated. It's not. You're already doing it. As soon as you buy a stock, you are the best tape reader on that stock in the world. There's no doubt about that. So let's use Mark as an example. Mark Badash is in our boot camp right now. So let's say Mark buys a stock, whatever the stock happens to be. Let's just say, for argument's sake, Mark did a great job and he's buying Apple stock this week, right? So let's take a look at Apple. And Apple, a little bit of profit taking this morning, not that much, but he buys it and he's like, okay, I'm long. That's the price I got in. As long as it stays above where I got in, I'm golden, and I know that stock better than anybody. The trick to tape reading, or the skill, I should say, I don't want to say it's a secret, I don't want to say it's a trick, is the skill is recognizing a price that matters before you put the trade on. So you're actually reading the tape before you put money on the line. As long as you have that price, this is the biggest challenge that people have. Once you have that price, you will know in a heartbeat when it changed or if it's still valid. So if you have the price and it's trading down, yeah, that selling is still valid. If you have the price and it stays above there, now you're validating buying. When you add order flow stacking on top of tape reading and you put a cherry on top, which is the optimal entry, buying that stock at the right time, you have the recipe for really being confident when you're looking at the stock market. The challenge that a lot of people have is maybe they have only one of those three things. It's all of those three things. You can imagine like legs of a stool. If you only have two of them, the stool's going to fall over. So you need all three of those. So again, if this is new to you, definitely go back and watch this part of the video again, because it's positioning you to accept risk with a lot of confidence because you built that argument to accept risk in the first place. But the most important part is if it reverses, you know exactly how and when it looks like if it reverses, and then you hit the road and you look for another trade. Okay. If all this stuff is new to you, definitely do me a favor. Make sure you hit that subscribe button, because these are the kind of details that separate somebody who's super smart but can't make a dime from somebody who keeps it super simple but sees their account go up every single month. And it's possible. It's definitely possible. Our community is having an amazing month of March right now because we're not fighting the tape. We're paying attention to the tape. Definitely a couple of people frustrated about why is it still going up with all the bad news in the market right now. But for the most part, we calmer heads prevail, cooler heads prevail, and we're just like, look, it's still going up right now until it reverses. There's no reason to do anything else or get out of the winners. So anyway, that's what we're talking about and how we're looking at Hood stock and working our way over to Micron. Apple, obviously, a little bit of profit taking. I don't know if you saw the news on Apple, but this is the strongest, longest run that Apple has made since 2003, which was before the iPhone, which is absolutely crazy. It's just an amazing, amazing move to the upside. We thought this was going to hold. That one didn't hold. We thought this was going to hold. We actually gapped through there. Pulling back a little bit today, but not really that much, all things considered. We'll see how it's going to end up unfolding. I want to work our way over into another stock that's one of the stocks that is very popular in our community, which is BROS, Dutch Brothers, a coffee company. You can clearly see now, again, putting the pieces together, reading the tape, really good volume. We spiked through. We're actually holding a little bit now. So now here's the next trade, right? So raise your hand if you've taken a breakout trade that failed. You know, like, oh, breakout fails to all-time highs. They stink. Breakouts fail. They stink. Well, I don't know why breakouts get such a bad rap compared to any other trade, because you can say any other trade doesn't work once in a while, but the ones that do, those are the ones you're supposed to make money on. So we're going to keep an eye on BROS today. Maybe we'll talk about this tomorrow and the rest of the week as we go through it. BROS broke through a big level yesterday and smashed through it with big volume. So you can clearly see the level that we've been watching. Once, twice, three times, four times, five, like six times it got to basically 59.60, 59.50, and finally punched through there. So two things to consider in this stock right now. Number one, the concept of a breakout trade, okay? Avoid saying breakouts work or they don't work, because you have to get back to the very core of what we talk about with trading is everything is about having an edge. Having an edge means most of the time it should follow through. That also explicitly means sometimes it doesn't. Everybody forgets that other part and they're like, it doesn't work. I'm so angry. You admitted you had an edge, which means most of the time it does. Sometimes it doesn't. On the times that it doesn't, you have to put on your professional overalls and say, okay, that's a part of trading. So how do we bring that back to BROS right now? Okay, so BROS, broke out. It's a solid idea. And generally speaking, this candlestick is both going to be the entry and the risk. So you could risk back here to the breakout level, or you could risk here. I tend to give it a little bit more risk to the candle it actually broke out from as opposed to that exact level. So I'm looking at BROS today. It's got plenty of room. It's setting up properly, but now you got other factors. So you have the market that looks like it's pulling back a little bit today. You have the stock finally got through a level that it hasn't been able to get through for ages. And if you trade the stock every day, like a couple of people in our community do, it's got a little bit less liquidity. So the average volume is a little bit less. The spreads are a little bit wider. So all of those factors, the market pulling back a little bit, the first time it broke through that level, and the stock trades a little bit less liquid, would have me looking to build my position here again. I'm not going to take full share size the first time it breaks through that level. I want to see if it holds. But here's the part that will make trading a lot less stressful for you. If we put the trade on and we put on 1/3 of what the position would be that we're looking to build in BROS stock, and it breaks out and pauses, great, I'll add more. And the next level looks like it's up around 80, which is almost $17 higher from where it is right now. So we're going to look for a first piece above this breakout level. If it trades back down and takes out the candle that just broke through, we'll get out. No harm, no foul. It'll be only 1/3 of the piece. If it pushes up for a couple more days, then pauses on light volume, I'll look to add more to the trade and I'll hang on to it. That's the way I'm going to manage this. So if this trade does not hold and trades back in, I understand. Hopefully you understand that's part of trading. I keep going back to this topic because I see a lot of the comments, and we're actually going to talk about a stop loss in a second because somebody asked a good question yesterday about stop loss versus trailing stop loss. When you have in your mind the concept of the fact that anything can happen and all you need to do is be prepared for anything, trading completely changes because now it's not up to what the market does. Now it's up to what you do. And there's nobody to blame or give the credits to anymore other than you because you took control of it. And that means you're also taking control of the upside. If you manage the downside and mentally manage the possibility of downside, That's where the upside becomes amazing. And here's why. And this is such a under-discussed, I don't even know if that's a word, under-discussed topic in trading. Okay. Trading is a skill, which is why people in our boot camp eventually stay for the year, because they realize that we need to see many different types of market conditions. When you manage the downside, you are now maintaining your trading account, which also allows you to trade more, which allows you to develop the skill of making good decisions. So here's how managing losses makes you a better trader. When you manage losses, you now are around long enough to have enough experience to understand how to make money. Think about that for a second. If you blow your account up on 2 trades, you're done. You have no experience. You didn't learn anything. If you manage the downside on a risk you accepted before the trade and it goes down, you just simply go out, you preserved your capital, and you go to the next trade looking to make it back on the next idea. The more discipline and professional trading you do to get out of trades that don't work, you will now be around long enough to make more trades, to understand how and when to hold good trades longer. Is it that simple? Yes, it is. The problem goes back to what we said at the beginning of the call, is too many people are trying to make money too quickly and they want excitement. Now, I know we all opened an account because we want to make money. That's not my point. My point is developing the skill to understand different market conditions and then trading the right risk for the right profit target for that current condition. No different than driving a car. And I know I keep going back to driving a car, but it's the perfect thing to visualize. You don't just get in the car and say, today I want to do 80. It just doesn't work that way. But far too many smart traders come into the market and they're like, today I want to make 1,000. But what if it's raining? What if it's snowing? What if it's stop and go traffic? What if it's a rubbernecking delay? What if there's a cop on the side of the road and everybody's looking at him? All of those things have to be taken into consideration. You just don't step on the gas every single trade. When you think about what I just said and give yourself a chance to learn to make better decisions by first making a good decision to manage the downside, then you're around long enough to work and earn the upside. That's how you last as a trader. When you treat it like something, I want to have this skill for the rest of my life, which is actually something that people ask me all the time. I want to be in charge of, no matter what happens in the world, I can still make a living. I hope you have that same aspiration, because look, jobs aren't what they used to be. Right now, we're looking at the great resignation where nobody wants to go back to work. Long-term loyalty is just not what it used to be. This is the ultimate business to run. No nights, no weekends, no inventory, no employees. Your inventory is your trading capital. So manage the downside to be around long enough to work the upside. So I want to walk you through a couple of other ideas. We're actually hitting 8 o'clock. I got to get ready for my other meeting, but I want to give you a chance to screenshot this, and I'll walk you through the sheet. So obviously we talked about Micron today. We talked about Hood. We talked about BROS. What I want to talk about is the sheet of the best ideas. So you know that when we work our way through this sheet, these are the stocks that meet order flow criteria over multiple timeframes. So you could basically say, this is the sheet that I give everybody in our community, where I've already stacked the order flow for everybody. And just in case, if you haven't signed up for a boot camp, it's basically done for you. I know Cynthia's in our boot camp right now and a couple of other people. I do all the work for you. I do all the research, everything. I give you all my trade, everything during the day. So what I'm about to show you right now is one of the sheets that I give everybody at the end of the day. These are the stocks that match the perfect criteria. And then you dig a little bit deeper and you go in to see which sectors, which industry groups have the most stocks. And then you go into those stocks to see which ones are near the optimal entry. So I'm going to walk you through this very quickly because I have to get ready for our other meeting. If you want to learn more about the bootcamp, the next one actually starts next Monday. Click the link below in the description. I'd love to see you on the other side. It's an amazing experience because we probably over deliver, I think, but you'll find out if you click through it, and you'll find out. So what we're talking about here now into today, which is heading into Wednesday, we have 34 stocks that meet the perfect criteria. But here's where I want to really show you how to break this down. You stored it, and now we're looking at where are the most stocks that meet the perfect criteria. So we're talking about some offbeat. We're not talking about Amgen or those guys. So healthcare, maybe not. Real estate is interesting. I think that we all know right now. Oh, by the way, did you see the news about real estate, new home inventory of homes for sale right now? It is the lowest number in the history of them keeping that record. So right now, people are buying houses 40, 50% over the asking price, and those houses are being sold in the same weekend, maybe even one day. Are we looking at 2007 again? I don't know. There's some pretty smart people on here that know real estate probably better than I do. But when you start to get into a big bubble like that, I know people are scrambling. We might want to start taking a look at some real estate investment trust. We'll see. Anyway, so there's a couple of real estate stocks in here, but what we're talking about here is consumer cyclical. Some other ones that have not necessarily been in play for a while. If we take a look at eBay, we mentioned it last week when it rallied here, should have rolled over and didn't, and it kind of went into our other list, and now you can actually see it's taking off. So this is actually one that's starting to get a little bit interesting. So anyway, the point that I want to make is once you start to understand how to build this list and understand how to use the list, like obviously Square SQ is a big one that's in the list recently as well. Again, I want to be respectful to the language. Trading becomes a lot easier when you are simply tracking and piggybacking the smart money that is moving stocks in and out of sectors, as opposed to trying to find something to trade that you hope moves in your favor. This is what stacking the order flow really is all about. We go from 1 hour to 1 day to 1 week to 1 month, and then we bring it back to tape reading in the optimal entry. And that's where trading becomes kind of fun because, again, you're not lost anymore. You know exactly what you're looking for. And I know we have a couple of people here in the community. LJ, I know, is in the community with us. Really, really appreciate it, LJ. Let's see. I know Steven's in the community. Steven is actually the game planning that Steven Menzel is doing and just being in our community in the last week and a half. Mind-blowing how much he's achieved in just 10 days. But I also know I could go into the education portal. I can see how much he's studying. Let me see. Austin, joining the boot camp is the best money I ever spent on trading. Wow. Thank you so much, Austin. I really appreciate it. Somebody asked me to take a look at Tesla. So anyway, you can see here on the sheet, this is what makes a difference. When you start to get to the point where you're game planning like this and you're just following and piggybacking the smart money, trading becomes a lot less stressful. And isn't that really what we want? Two things that we all want from trading. Obviously the money, let's put that aside, but we want to be in control and we want to have very little stress. Raise your hand if you visualize trading as control and not stressful. I don't think most people see trading that way. The way that we do it, it's different. We start out order flow stacking where we're only looking at ideas that already have smart money buying, and then we look for a spot to piggyback on top of that. So look, I'd love to see you in the boot camp, obviously. But I hope even through these YouTube live streams that I'm inspiring you to think that if there's a gap between where you are now and where you want to be in the stock market, I hope I'm at least inspiring you to say, what am I missing? And then go on a journey to figure out what you're missing. And if we do nothing, if that's all I did for you, that makes me happy because I want you to know that there's something different. You could probably achieve the results that you want. If you're not getting them now, though, that means that there is a gap and there's something has to change. All right. I have to head on over. You can actually click in the description, Rafi. You'll see in the description below the video, the next boot camp starts next Monday, actually. Next Monday. Anyway, I have to head on out, everybody. Thank you so much. We covered a lot of good stuff today. A lot of trade management and mindset stuff today. So you might want to come back and watch this video again. All right. If you haven't actually done so already, please do me a favor, subscribe so you get updates. And if you found this video helpful, do me a favor and smash that like button. I'd really appreciate it. Any follow-up questions to what we talked about today, leave those comments below the video as well. Okay. Have an awesome day today, everybody. Thank you so much. I really appreciate it.